What would a Hillary Clinton presidency look like for the U.S. dollar? By www.forexconspiracyreport.com. The Democratic National Convention is upon us, and the Democrats will nominate the first woman to be their standard bearer in the race for the presidency. Hillary Clinton is decidedly more liberal than the alternative, but what would a Hillary Clinton presidency look like for the U.S. dollar? The dollar is driven higher by a healthy economy, strength in foreign trade, and higher interest rates. Assuming that Clinton takes to the Oval Office, how will these three factors turn out, and how will the U.S. dollar respond? U.S. economy. MarketWatch notes that while small businesses are optimistic, they are less positive about the U.S. economy. A new survey by San Francisco-based Bank of the West found that 81% of small businesses expect to do well or very well over the next 12 months. With profits stable or rising, many plan to increase hiring and investment. Small businesses are still in growth mode, said Scott Anderson, chief economist at Bank of the West. They are certainly investing more in their businesses than they did last year. That's good news for the U.S. economy, even if small businesses are less cheery about the national picture. Only 60% are optimistic about the U.S. economy, down from 65% a year earlier, the survey found. MarketWatch says that perhaps the steady drumbeat of bad news and the terrible portrait painted by the Trump campaign may have something to do with this. Nevertheless, small business is still positive about the economy, and that means a stronger U.S. dollar under a Clinton presidency. Manufacturing and exports. U.S. manufacturing is not concerned about the doomsday theme of the Trump campaign. According to Seeking Alpha, this last month was the sharpest rise in manufacturing in almost a year. July data signaled a further rebound in business conditions across the U.S. manufacturing sector, led by a robust expansion of incoming new work and the fastest upturn in production volumes for 8 months. Job creation also strengthened in July, with the latest increase in payroll numbers the fastest seen over the past 12 months. Manufacturers are not concerned about doomsday scenarios, as products are rolling off the assembly line at a brisk pace. If manufacturing is a predictor, a Hillary Clinton presidency will raise the U.S. dollar. Interest rates. This is the province of the U.S. Federal Reserve, and it will make little difference at first who is in the Oval Office unless they mess up totally, as the Fed will watch the economy and use higher rates when necessary to stave off inflation. Fortune looks at when the Fed will probably raise interest rates. Under Fed Chair Janet Yellen, the central bank has made it clear that its actions are going to be informed by the data. Pure and simple, the Fed will not raise rates this week because the economic data simply doesn't warrant an increase. While the payrolls number was unexpectedly strong in June, it was on the downside in May. Housing starts in June were much stronger than expected, increasing by 4.8%, but that number has historically been extremely volatile. Fortune expects to see a rate increase in December after the election, at which time the dollar will go up again. For more insights and useful information about Forex trading and markets, visit www.forexconspiracyreport.com.